Trading. The curiosity everywhere. Students, let me start with a question. Have you noticed something strange these days? Everywhere you look, Instagram, YouTube, Telegram, even WhatsApp groups, everyone is talking about trading. College students want to trade, working professionals want to trade, even people who have never touched finance are suddenly like, bro, market mein entry marni hai. Why? Because everyone wants quick money. Everyone dreams, if I can earn 1,000 or 2,000 rupees in a day from my phone, why should I struggle for a whole month to earn a salary? But wait, is trading really that easy? Is it good? Is it bad? To answer that, we have to understand what actually is trading.
What is trading? Imagine this. Imagine you walk into a giant digital marketplace. Here, prices are jumping every second, up, down, like a heartbeat. And in this marketplace, the rule is simple. Buy something at one price, sell it at another, and the difference is your profit or your loss. This is trading. It's not slow, it's not relaxed, it's not patient. Trading is like catching a moving train at the right time with the right speed. Sometimes you hold for a few minutes, or a few hours, or maybe a day or two, sometimes even a few weeks. It is short-term, it is dynamic, it is fast, but it is also powerful when you know how to use it. Is trading good or bad? The knife story. Students, listen carefully. Trading is like a knife. In the hands of a chef, it creates beautiful dishes. In the hands of someone careless, it can cause injury. Trading is the same. If you learn properly, if you follow rules, if you control your emotions, trading can give financial freedom. But if you enter blindly, without knowledge, with greed, with overconfidence, trading can wipe your money faster than you imagine. So, trading is neither good nor bad. It depends on how you use it. Types of trading. 1. Intraday trading, the one-day challenge. Imagine you enter the market in the morning. You buy something, and before the market closes, you must sell it. That's intraday trading. Example, you buy Reliance at 2,400 rupees in the morning. By afternoon, it hits 2,450 rupees. You sell, boom, fast profit. But if it falls to 2,380 rupees, you need to exit quickly or the loss grows. Intraday is exciting, but it needs control. 2. Swing trading, the mini vacation trade. Swing trading is slower. Think of it like going on a 5 to 10-day holiday. Relaxed, calm, no rush. Example, you buy Tata Motors today because the chart looks strong. You hold it for 7 days. Price moves up steadily. You sell for profit. No stress, no minute-to-minute watching. Perfect for students with classes or people with jobs. 3. Scalping, lightning-fast money strategy. Scalping is for the fastest hands. Trades last seconds or maybe a few minutes. A scalper might make $5 on one trade, $7 on another, $12 on the next. Tiny profits, but many times a day. It's like picking up many small coins, and by the end of the day, it becomes a big amount. But this style needs speed, accuracy, low emotions, and strong discipline. Now picture this. You see a big trend in the market, like electric vehicles, AI technology, or renewable energy booming. You buy a stock today and hold it for weeks or even a few months. When the trend matures, you exit with a bigger profit. This is positional trading. It's slow, it's steady, and it is one of the safest forms of trading. 5. Real-life trading example. Let me take you inside a trade. A trader buys Infosys at 1,400 rupees in the morning. By afternoon, it jumps to 1,430 rupees. He sells, $30 profit per share. If he bought 100 shares, he just earned $3,000 in a few hours. Sounds cool, right? But imagine the opposite. Infosys falls to $1,370. He loses $30 per share. This teaches us one thing. Trading rewards the prepared. Trading punishes the careless. Trading versus investing. Students, tell me, are you someone who likes quick action or someone who likes long-term stability? Because trading and investing are very different. Let's compare them like a short movie scene. Trading versus investing. Trading, short-term, fast profits, fast risks, uses charts and timing. Watch the market daily, active participation, many trades. Investing. Long-term. Slow but steady returns. Studies company fundamentals. Rarely checks the market. Passive involvement. Few trades. Both are powerful. Both can make money, but each needs a different mindset. Why people are attracted to trading? Because it gives quick money opportunities, it feels exciting, it gives a sense of control, it offers flexible timing, it rewards skill, not luck. You can trade from anywhere, even your phone. But people forget the most important part. Trading rewards skill, not dreams.
Benefits of trading. Here's how trading can genuinely help you. Quick profit opportunities. You can make money in hours or days. Flexible time. Trade for 1 hour, 3 hours, or just check swing trades once a day. Skill-based income. Your chart reading, discipline, and mindset, these make money, not just capital. High liquidity. You can enter or exit instantly, no waiting. Many strategies. You can choose intraday, swing, positional, or scalping. Opportunities in rising and falling markets. You can even profit when the market goes down through short selling. Pathway to freedom. With rules and discipline, trading can give time freedom, financial growth, and lifestyle flexibility, but only if you respect the market.
Imagine you are standing on a surfboard in the middle of the ocean. Waves are huge, strong, unpredictable. If you balance properly, the waves take you forward, fast. But if you lose control, the same waves can pull you under. This, students, is the reality of trading. Without stop loss, without risk management, without a plan, even the best strategy fails. One wrong trade can wipe your profits. A few wrong trades can wipe your capital. That is why we learn. That is why we practice. That is why we stay disciplined. So, students, trading is not magic. Trading is not luck. Trading is not gambling. Trading is a skill, a profession, a mind game, a discipline. And if you learn it step by step, just like we are doing here, you can become the type of trader who survives, grows, and succeeds. In the upcoming videos, I will take you deeper into candlesticks, support and resistance, strategies, risk management, psychology, and real chart examples. Your journey doesn't end here. This is just the beginning.
If this video helped you, hit like and subscribe. Comment below what topic do you want next. See you in the next video. Simple logic, strong discipline. The NVN Trader.